So a lot of people do not understand how forex trading actually works, right? You probably heard there are people who trade forex, but you don't understand what they actually do and how they make money trading forex. So before we will go into the actual course, right? You have to understand the concept behind trading before you even start. You have to know what you are getting yourself into, what this thing is about, and how traders make money trading. So you are going to understand what it means by what if you say someone is trading, right? And who even is a trader, and also why traders are always staring at their charts every day. So probably if you've seen a forex trader, or you have a friend who is a forex trader, or if you've come in contact with a forex trader before, you realize they're always staring at charts either on their laptops or on their phones, right? So this video is going to make you understand the concept behind forex trading before you start the actual forex tutorials, right? To understand the concept, a lot of people do not understand how forex trading is done, right? So, and they will also tackle what traders actually trade. So you've heard probably traders trade, but you don't know what they even trade, right? So this video is going to explain to you all those unanswered questions. Now, what do traders trade? Traders trade currencies. So what forex traders trade is currencies, right? They trade currencies. Traders trade two currencies against each other. So what that means is traders trade currencies, but we trade two currencies against each other, two currency pairs against each other. We'll go deep into that, right? Example of these currencies are United States dollar, British pound, the Ghanaian cedi, and the Australian dollar. Now, on the forex market, we do not use the full name, right? Usually we use the abbreviated names. So in this case, United States dollar is USD, British pound is GBP, right? Great British pound is GBP. I know probably some of you know that the abbreviated form of British pound is GBP, and even for US dollar is the most common one, right? And then the Ghanaian cedi is GHC, right? And then we have the Australian dollar, which is AUD. Since we trade two currencies against each other, the abbreviated names are combined. So we have GBP USD, meaning we are trading the Great British Pound against what the United States dollar. So there's two abbreviated versions will be GBP USD. We have AUD USD, meaning we are trading the Australian dollar against the United States dollar. And then we have the GBP AUD, which means we are trading the Great British Pound against the Australian what? Dollar. Now, on the chart, you are not going to see the full names, right? What you are going to see is GBP USD, AUD USD, GBP AUD, or USD GHC, right? So we are going to see these pairs, and because the currencies are traded against each other, we combined the abbreviated names to know which currencies you are trading. So let's move to the next one. Why do traders always stare at those charts, right? And how does a forex chart look like? Probably some of you haven't seen a forex chart, but I'm sure most of you, because forex is really exposed on the internet, so most of you have been seeing these charts, right? So this is how a forex chart looks like. This is how a typical forex chart looks like. So this current chart is pound USD, GBP USD. That means you are trading the British pound against the United States dollar, right? So GBP USD. This is how a forex chart looks like. This is another example. We have GBP AUD. So we have Great British Pound against what? The Australian dollar, right? And then we have United States dollar against what? The Ghanaian cedi. This is also the chart, right? So these lines you see on the chart, these blocks you see on the chart, red, green blocks, is the currency price. So is the currency price, they represent the currency's price, right? So these currencies, it represents these currencies' price, right? So yes, I'm going to go detailed into explaining what I mean by that, but for now, just understand the concept that these blocks, red candles, they are also called candles, but I just don't want to confuse you for now. So let's just take them as red and green bars. So these red and green bars hot currency price, so the currency's price that is being shown, right? Okay, now yes, and this, so these markings what represents the value of the currency, the current currency's value, right? So you see we have an Australian dollar here. So right now I'll explain that, right? But just take it that the markings here are actually the currency's price, where it is at, right? So if this was to be a United States cedi, trading a United States dollar against the cedi, you are going to see currently the dollar is at 15. I think the cedi is at 15 cedis to a dollar. So you are going to see what 15.0. Now let's go back to now. So that's how the forex chart looks like. So why do traders stare at these charts? Traders stare at the charts to see the movement and direction of currency price, whether it is pushing up, down, or sideways. So as I said, these red and green blocks represent currency price, right? The currency that you are trading, its price, right? So they represent the movement. So it's the body, because you can't actually just look at the numbers and you can't just stare at them. So this is something that gives the price of a currency a body to see how it's actually moving, right? So if cedi moves from 10 cedis to 15 cedis, it's going to be represented on the chart with these blocks pushing up, right? And then if cedi moves from 15 cedis to 10 cedis, it's going to be represented on the chart with these red and candles blocks pushing down. But currently on this GBP US, you can see it's pushing up. Now we'll get much deeper into that. So understand these red and green candle blocks is the currency price. Now, so traders will stare at these charts to know whether the currency price is pushing up, pushing down, or sideways. So this chart is what will inform a trader to know whether the currency of this specific currency he's trading is pushing up, pushing down, or moving sideways. Something that gives a representation, a visual representation. So this currency price is a visual representation of the currency that the trader is trading. Now, when a currency price pushes up, that means it is strong. When a currency price pushes down, that means it is weak. I think it's very straightforward. When a currency price pushes up, that means it is strong. When a currency price pushes down, that means it is weak. Yes, so the last one left out is sideways. When a currency price is pushing sideways, not really pushing down or pushing up, that means it's not making a significant movement. So let's say if the cedi is pushing up, right? The cedi is at 10 cedis, right? And then it's pushing up. It will push up to 15. If the cedi is at 15 and it's pushing down, you see the charts currency price pushing down, and then you realize the cedi will push down. Now, these markings on your right, you are going to see if this was a United States cedi. Unfortunately, this screenshot doesn't have that part was cut out, but let's use the pound odd, right? So with a pound odd, if let's say this was a United States, dollar against the cedi on this chart, right? The markings right here, that will be 15. So currently the cedi is at 15, right? So it will be 15 and then 13 coming down, 12, 10, we have 9, 8, right? So if a currency is pushing up, that means it's strong, and if a currency is pushing down, that means it's sideways, and it's weak, right? And if a currency is pushing sideways, that means it hasn't made any clear decision where it wants to go. So you probably have the currency stalling up at a particular price. So let's say it will be stagnant at 12 cedis for some time, maybe 2 days, 3 days, even for a month, or even for more than 5 months or even a year, right? So it actually depends on the particular currency. Now, someone who asks, we are saying when a currency is pushing up, that means it's strong. So how do we know which currency is pushing up or which currency is this? Because the currency is representing two, right? It's representing two currencies. The pair is two currencies, right? So this chart, what is it? Which currency is it actually representing out of the two? We are going to get there. Now, so uptrend means what strong, downtrend means what weak, and sideways means the currency is stagnant at a specific place, right? Now, knowing the direction and movement helps measure the currency performance. So when a trader looks at his chart, it informs him to know what the performance was of the currency he's trading, whether the currency is strong, the currency is weak, or the currency is in a sideways market. That is why traders are always looking at the chart, because that is where we get our information from. That is what we watch on to take our decision. So pushing up, strength; pushing down is weakness. Sideways means stagnant, right? So if a currency is pushing up, right, a strength. If a currency is pushing down, it's weakness, and if a currency is moving sideways, it's what indecision. Now, so yes, there are two currencies combined. So which one is the chart displaying? You are probably asking yourself. Do you understand? Whenever you open a forex chart, the price movements you see represent the value and performance of the first currency compared to the second one, right? So, remember I said we trade two currencies against each other. So we trade the United States dollar against what? In this case, the Great British Pound against the United States dollar, Australian dollar against the US. So it says here that whenever you open a forex chart, the price movement, this is currency price, this is price movement, right? The price movement you see represents the value and performance of the first currency compared to the second one, right? What that means is that when you open this chart, it's going to show the currency price here is going to belong to what? The pound. And is showing you how the pound is performing against the second attached currency, which is the United States dollar. So in this case, looking at this chart, that means the Great British Pound is performing well against the United States dollar, right? The Great British Pound is performing well against the United States dollar. So whenever you open a forex chart, the price movement you see represents the value and performance of the first currency compared to the second. Now, the second currency helps you know which currency the first one is performing against. So yes, the second currency is going to help you know which currency the first one is performing against. So in this case, the USD, GBP is performing well against USD. Now on this chart, GBP odd, so the Great British Pound is performing well against the Australian dollar, right? Yes. Now, as I said, the markings on the right represent the currency being traded against. So in this case, the marking here is going to represent the Australian dollar. So since the Great British Pound is gaining strength over the Australian dollar, currently you will need 2.06 Australian dollar money to buy a pound, right? To buy a pound. So if this was the cedi chart, you are going to see 15 cedis, right? Currently here you could see 15.45, right? 15, and that's the current price of the cedi to a dollar. So the markings here will be 15.45, right? Unfortunately, it didn't appear, but just compromise. So 15.45 is going to be the marking of where the chart will be currently at. And then we said that when you open a chart, the currency price that is being displayed represents how the first currency is performing against the second one. So in this case, cedi is just, trashing the United States dollar, is just trashing the cedi. So because it's pushing up, it's showing you that the United States dollar is performing well against the cedi. So in this case, the United States dollar has pushing up to $1 is to 15 cedis. So the markings here, like how a chart looks like, right? A graph looks like, we have markings on the side. So the markings here, they are not just numbers, it's the price. So in this case, if we are on this cedi chart, we are currently at 15.50. So $1, if you want to, that's how much you need, right, to buy a dollar. So in this case, on this chart, this is how much you need to buy 1 pound. And on this chart, this is 1 so you need $1.29 to buy a pound, right? And then the currency pound has pushed up. So what that means is that if we are to open a chart and then the chart is pushing down, let's say this side, right? If we open the chart, when we open the chart, this information wasn't yet, right, printed, and then we were pushing down, right? We will probably have this at 14, around 14 or 13. What that shows is that the United States dollar at this particular time was performing worse against what? The cedi, has lost strength against the cedi. That is why the cedi also was gaining strength. And since the cedi was gaining strength, was the United States dollar, the chart shows that it was pushing down. So as I said, whenever you open the chart is displaying what? The price, the currency price of the first currency. And the first currency is also called base currency, right? So displaying the price movement of the first currency, and then how well the first currency is performing against the second currency. So whenever you open a forex chart now and you see, let's say, GBP odd, right, and you see that it's pushing down, the fair idea now you have is that means the pound is losing strength, is performing worse against what? The Australian dollar, right? So if it's pushing down, let's say it pushes down to this level. At first you needed 2.06 to buy what? A pound. But now you need lesser, 2.01 to buy what? A pound, because the pound is gaining weakness. And if a currency is gaining weakness, the other currency, you need much lesser to buy that currency. You need less money to buy that currency, right? If a currency is performing, so let's say if the dollar keeps performing strongly, you need a lot of cedis. Like you need a huge amount of cedi to buy what? Even a dollar, right? Yes, I think it's understandable. So this is the reason why traders look at the chart. We look at the chart so that we'll be able to know how a currency is performing. That is what traders, because that is our office. That is where we make our decisions. So you can't you can't say you are trading without looking at charts. It's not even possible, right? So yes, so now you know that on the forex market, it's either pushing up, pushing down, or what? Pushing sideways. Now, and we also know that pushing up signals strong strength, and then pushing down signals weakness. And also we also learned that what? Whenever you open a forex chart, that what the chart is actually displaying at that time, it belongs to how the first currency belongs to the first currency, right? It shows how the first currency is performing against the second one. But on the side of the chart too, you are going to have the currency price of what? The supporting currency, which is this one. Yes, so I think it's very clear now. And then yes, so yes, when you click on a GBP USD chart, the price movement being displayed belongs to the British pound, and it's also telling you how the pound is performing against the dollar. Yes, so I think this is very understandable, right? How the Great British Pound, so in this case, it's telling you that the pound is what? Just destroying the dollar. That's why it's pushing up, and now you need $1.29 to buy what? A pound. If it's to drop down here, that means you need lesser dollar to buy what? A pound, right? Okay, I think this is very, very, very understandable. Now, so in summary, in this session, traders trade two currencies against. So now you know what traders trade. You know traders what? Trade currencies. And then we don't just trade currency, we trade two currencies against each other. And also now you also learned that traders always look at the forex chart to know the direction and performance of what? A currency, whether it is going up, down, or what? Sideways. So yes, now we understand why traders are always staring at the chart, right? We look at the chart to know whether a currency is performing better against another currency, and then we know what to do. Now, when currency is pushing up, it tells you that the currency is strong, and when currency price is pushing down, it tells you that that currency is weak. So right now, I know if any one of you are to open the forex chart, right, you know what you are looking at. When you open the forex chart, you know that, oh, okay, this thing is pushing up because what? GBP is strong against the United States dollar. This thing is pushing down because what? GBP is weaker against what? The United States dollar. Or this thing is moving sideways because what? The price is stagnant at what? A specific position. Now, and lastly, an open chart. I think there's a mistake. 33 is supposed to be 4. An open currency chart displays the performance of the first currency against the second currency. So yes, if you open a currency chart, the first currency shows how the first currency is performing against what? The second currency. So they always, I said this is what? Currency price, right? The price display is giving the currency price what? You can't actually see, you can't just see price moving. So in order to see how price moves, that is why we are using these bars. What these bars gives price a body to be able to interpret it, have a visual representation of how the movement of prices, right? Without that, you not be able to just see the numbers changing, but you won't know what they're actually doing to change, right? So the chart actually gives us a visual representation of what the currencies being traded. So now you know that what traders trade currencies, and you know that what we trade two currencies against each other, and you know how a chart looks like, and you know the phases that what the chart goes the currency price goes through, up, down, sideways. And then we also know what a chart pushing up means, what a chart pushing down means, and you also know what direction. Yes, so they say power, pushing up is strength, pushing down is weakness. And then we understand that whenever you open the chart, the first one belongs to what the chart belongs to the first currency, right? And how the first currency performed against the second one. So in part 2, yes, I want to break this into parts. In part 2, we are going to understand what how traders actually make money, right? After having this information, because you need to know what traders actually trade, and then know what these charts are before I start showing them to you, right? And you also need to know what it means by pushing up. So this is to let you understand basics. Don't skip this part. Understand, especially if you are new to trading, right? You're a beginner and you want to take trading seriously. Take your time, understand this, right? Because if you really want to make money from the forex market, you need to understand these basics, right? All right. So in the second part, we are going to now handle how traders make money from. Now you know that this is how the chart looks like. So how do traders make money on this thing that is moving, right? How do traders make money? So on the forex chart, the next part you are going to understand. So I want to break this into two parts. So make sure you watch the second part.